Hey, this will be a robotic trading quick lesson. This one's going to be a little bit different. We're not going to exactly be a lesson. It's more just going to be about a point and an idea, and basically just a penny stock myth that I want to expose here because it kind of drives me nuts, and it's just not true. So that's going to be the point of this, just exposing this myth, but also showing why this myth being false is a good thing for you as a trader. So that's going to be the main point. Is sure, this thing is false, but that's actually a good thing for you. So before I even get started, I just want to ask a quick question. Raise your hand if you've ever owned a penny stock and then you've heard someone say, and this could be on the message board, this could be on a stock chat room, this could be from a neighbor, this could be from anybody, but the point being, you own a penny stock and then you hear this in regards to that particular penny stock. It's okay that our stock is down today. The overall markets are also having a rough, bad, red, down day. You can replace anything you want in there, but point being, they're saying that because the overall markets are having a bad day, that is why that particular stock is having a bad day. So just to set up the premise of my argument and what I will be exposing as a myth, what does this imply? Well, this is saying that there is a relationship between the penny market and the big board market. So that's going to be the grounds. This is the point which I'm going to refute and display why this is false and a myth. So what we're going to cover the myth. We're going to show documented proof of the myth. We're going to issue a challenge to you, and then we're going to, like I said at the beginning of the video, talk about why this myth being false is a good thing for you as a trader. So like I briefly touched on, I am saying and I am making the claim that there is zero, none, not a relationship between the two markets. Penny stock, big board market, there is no relationship between the two. That is what I am out to prove, and that is the myth. Like I said, the myth is that there is a relationship. I am saying there is not. So let's talk about some proof of why this is a myth. First, we're just going to go over an alert, and when I say our alert, we're going to use the list, our email newsletter that we have that issued an alert, and we're going to talk about a particular stock. That way we have a real-life example. We're going to talk about the overall market conditions on that particular day, and then we're going to show how our alert performed on that same day. And then we'll just look at some things today that we'll see if this holds true for what's going on real-time as I make this video. So here we are at my Gmail login, and I want to just show a login process. That way you know this actually happened. There's no camera tricks or anything like that going on. This is a legitimate, documented proof that what we're about to talk about did actually happen. So let me log into my Gmail account. I'm going to hit sign in here. So here's my account, and then we are going to go down to our warrior charts for the week of 4/15. So again, here's my email account, and what I want to focus on. So this was for the week of April 15th, and what this is real quick, bullwarriorstocks.com is the newsletter that we run, and if you want to sign up for it, that's great. But what we do every weekend is talk about 5 separate chart setups, and then we talk about them the following week. So on this particular week, the one I want to focus on, here are the 5 ones, is HIDC. So if we come down, this was our volume alert play, found some volume, and then this is what the chart looked like when we alerted it. This is the Dow Jones chart we're looking at. So on the next day after the alert was issued, this is what the Dow Jones and basically overall markets did. Had a nasty, nasty day, down 266 points on that day. So this was the overall context. This is what was going on in the overall markets. Here was our alert of HIDC. This chart should look familiar. This is when we alerted it. So on the next day, and keep in mind, this is the same exact day as when the Dow was down 266 points. Look what happened there. A massive day on massive volume. So a completely different reaction than what the overall markets were doing. So now let's just take a side-by-side comparison. So again, that was our alert day. April 15th hit, and then that's what HIDC did. Made a 131% move in that single day. In terms of the overall market, April 15th, there was the day that happened, down 266 points, and a couple other things that really prove the point. And although one of the points is extremely sad, obviously, it does still provide a point. And that is, the first thing is, this was a rough day in general. It was already happening. It was just a brutal day. The market was already having, just a terrible day. And then on top of that, this was the same day that the Boston bombing occurs. So if that, and you have to keep in mind, now that we know what happened, but at that point in time, we had no idea, was it terrorists, what was going on. So there was ultimate huge uncertainty at that point. So that's what also then, added on to the already bad day and caused this. So two things, a bad day, and then something like this happens with massive amounts of uncertainty, and yet you look over here and it was still a very strong green day, and you can see it closed right up near the high. So it's not like it ended up falling back down. It maintained its gains and still had a very nice green day despite everything that was going on with the overall market. I know what you're thinking, and it's totally legitimate concern. You're thinking, hey, that's one stock. That doesn't mean that there's some sort of overall correlation. Fair enough, and like I said, that's totally legit, and I don't blame you at all. So let's take today. As of the recording of this video, the stock market is booming, up 151 points, and was up as high as 175 points or so. So this is real-time progress. If you look over here, you'll see this number change around. That's because the market is still open. So let's just take a venture around Pennyland. So right now, this is a massively good day. So let's see what sort of penny stocks we can find. I'm going to go through these fast, but this is MJNA, currently a very popular stock out there, one of the most read on the message board and so forth. So the Dow's up 150 points. You can see right here, red day currently. SKTO, markets are up big. You can see right here, red day currently. BRGO, markets up big. You get the point, red day currently. So that's 3 stocks, and I'll tell you right now, I haven't had much trouble at all finding these. VDSC, big market. You can see this, red day. FNMA, this is Fannie Mae, so a penny stock, yes, but it's not like it's some unknown company. Market's having a great day, and this thing, although not red, just totally just sitting in this little tight pattern here. So even a well-known company like this is not moving with the market or anything of that nature. Now, I still totally understand. You may say, hey, look, you've shown me 6 stocks. I still am not buying it. Well, then that's fine. If you don't believe us, then we have a challenge for you. First, we just want you to determine the direction of the Dow, or even maybe better yet, go and look at a sector. So if the oil sector is having a great day or the gold sector is having a great day, find something that's having a great day where you would expect, okay, because the oil sector, the gold sector is having a great day, this penny stock, which is a gold company or oil company, should also be having a good day if it's going to, have some sort of correlation and relationship with the overall market. And then just start looking at those penny stocks, and I think you'll see very quickly that the gold market could be roaring and having a fantastic day, but I would say the vast majority of the penny stocks that are gold companies are either just sitting there going down, and a couple of them might be going up, but I guarantee you that's not because of the overall market. Because if the overall market was, then the majority of those stocks would be going up in that sector, and that's just not going to be the case with the penny stock. So that is the challenge I issue to you. Go out and try it for yourself if you're still not buying that this whole thing is a myth. But really, there is no reason to fight this myth. This is good for us. There's a reason why we don't want to have something that reacts with the overall market. First, there's always options. If the markets are having a bad day, then why don't you venture into penny stocks? There's always going to be something moving in the upwards direction. Second, holding overnight is much easier. You don't have to worry about something in another country occurring and then that influencing, your stock. Now, sure, something could happen in the penny market, so I'm not saying there's a distinction there, but that is something good. You don't have to worry about Greece or, one of those other European countries coming out with more debt or something like that. It's just totally separate. And then that leads into the third point. You're just at the mercy of the company and chart. You are at the mercy of the CEO who, if he's a bonehead, then yeah, you're going to suffer the consequences of that. Or if the chart's starting to look bad, then you're going to suffer the consequences of that. But again, it's not something else. It's not something that's going on overseas or something that Ben Bernanke says or anything like that. The Federal Reserve, all that has no influence on that company of a penny stock that you're holding. So that is good in and of itself because there's separation there. You're always going to have options, and you're always going to be having the stock's fluctuations dependent on just what's going on with that company, not some overall market or overall sector movement. So hopefully you can embrace this fact and don't believe it. Whenever you see somebody say, oh, the reason this is having a bad day is because the overall market, that's just an excuse for that person to rationalize why they probably made a bad decision. So don't fall for it. Don't buy it. It's not true. And again, check out that challenge if you don't believe me. And I'd encourage you to see, what sort of correlations and relationships you can find out there. Thanks for watching the video. Hopefully you found it helpful and pulled out some things that you can use in your trading strategy, whatever that may be. If you did find it helpful and informative, then I'd encourage you to check out a couple of these resources here. The first being our robotic trading course. As you can see, it's over 8.5 hours of teaching, so there's plenty of information. There's all sorts of stuff and with it you'll be able to build your own strategies, learn about charting in general, and just really be able to, like it says, profit in any market environment. Because remember, just because the market may be bad, you can always short and things of that nature. So with the course, it goes over how to use charts, and when you learn the foundational things like that, then you can begin to build your own strategies that benefit you and fit into your personality and so forth. So I'd encourage you to check that out. And also on that note, I'll be the first to admit I'm pretty biased when it comes to it. So I'd encourage you to check out the third-party reviews and testimonials. Those were all unsolicited, all uncompensated. So these were just people that were reaching out to us saying, hey, I bought the course and these are my thoughts. So I'd encourage you to go to that link and just check out third-party reviews, because like I said, uncompensated. They reached out to us and wanted to offer feedback because they were happy with the course. Also, we have a Bull Warrior Stocks newsletter that is located at bullwarriorstocks.com. If you sign up for the free newsletter, you'll receive a free ebook with some charting strategies and so forth, a part of it. And like I said, that chart or the site is completely free, no obligations, no hidden costs, no strings attached, anything like that. You can subscribe, unsubscribe whenever you want to, and you're not going to have any sort of cost or anything pop up. So I'd encourage you to check out that. But as a warning, I'd say that it's better to learn charting and so forth, because the Bull Warrior Stock site is revolving around charts. So you got to know what you're doing when you're looking at charts. So place one to start would be up with the course, and then that way you can gain an understanding and add another tool to your tool belt. So again, thank you for listening. Hope you enjoyed the video. If you have any questions or anything on either of these things, please get a hold of me. Thank you and have a good one.